July 11th, and this is your daily financial news. 1 second. Hey, Sonny. Hi there, everybody. Sonny wanted to come say hi. Say hi to everybody, Sonny. Smash that like button for Sonny. There you go, Sonny. Yes, I know, using my dogs to get likes. What can you do? Anyways, July 11th, it is Monday. Here is your daily financial news. Lots of stuff going on. We will hit these key dates at the end. We will get into the news right away. First, this week, kind of an important week. Usually, I don't recall a July week being this kind of consequential, right? Usually the summer months, and specifically July, people are on vacation, people are taking it easy, they're at their summer homes, kind of a low-key month, let alone a low-key week. Not this week. Wednesday, we get CPI. I believe any reading above 8.5, and again, remember last month was 8.6, so any reading above 8.5 gives us a 75 basis point bump next week. If for some reason we got an 8.1 or an 8.2, which I don't see, but hey, could it happen? Sure. We might get a 50 basis point cut. I think at this point, based on the jobs numbers from Friday, a 75 basis point rate hike is almost a sure thing. But again, Wednesday could be the surprise. We could see something, but I don't see it. I think what's in play is not July. What I think is in play is September. At this point, given that I called July months ago, I'm going to call September today. We are going to get a 50 basis point raise in September. And I think it skews to the upside. Could we get a third 75 basis point move in September? Man, yes, it's possible. I just don't see it. I saw 75 back in June. I saw 75 in July, and I'll call 50 in September. That's a full 200 basis point move. So again, CPI. And remember, if you want to play along, you want to have a guessing game, you want to look at your crystal ball, play along, leave a comment below. Expectation is 8.6. I have called 8.8 for a month, so I'm sticking with it. Go ahead, call a number below. We'll see what happens. There we go. Earnings. We are actually, it's really subtle. I don't know if you saw it this morning, but Wall Street analysts might be waking up. For example, Lululemon. Lululemon was cut today, this morning. This might be the beginning of Wall Street analysts doing their freaking job. For the last couple of weeks, you've heard me rail against. You've heard me talk with Taylor, who is a 10-year Wall Street vet. He has a playlist on this channel where I vented my frustration at Wall Street's either being stupid or something else, lazy. They're starting to cut, and we saw it this morning with Lululemon. I expect a lot more. And then for me, what is going on with the consumer? We are going to get consumer data Friday. I believe it's retail sales and consumer sentiment. Both of those numbers are very important. Retail sales will be for June. Consumer sentiment will be for July. However, I believe more important consumer data will come on Wednesday and Thursday. That is from the 6 or 7 large banks that report. What are we going to hear? Well, my guess, trading volumes weak. My guess, M&A, mergers and acquisition, weak. Mortgages, weak. What will we hear about credit cards? What will we hear about savings? What will we hear about bad debt? This week is all over the map. And if you heard my conversations yesterday with Mr. Dan Bird, I was very clear. I think we are one step of a 3-step function to bottoming. We have seen compression in earnings. We have not seen earnings cuts, and I think it is criminal that they haven't been cut. But maybe, just maybe, with Lululemon's cut. They started today. We shall see. Next up, Redfin. You know, I think it's criminal that some folks with fancy titles don't think that we can see right through their skewed opinions. So Redfin's chief economist, again, remember, being paid by Redfin, tackled what is going on in the housing market. Here are some things she said. One, should sellers wait? Right? Sell now, sell tomorrow. Guess what her answer was? You don't even have to read the article to know what she said. She said, sell now. Shocking. Next, something else she said. What is going to happen now versus 2 years ago? Well, we saw 2 years of pretty intense migration. It is her opinion that that wave of migration has stopped or at least slowed. I think that is very reasonable thing to say. Number 3, what is going to happen to rentals? Now, this is specifically single-family homes, not apartments. As I have said over the last month, I do believe there is a difference, and all of you syndicators are going to. I see syndicators that are well-respected trying to do capital raises right now. Are you kidding me? Don't touch those. Crazy, crazy, crazy. Anyways, rental demand for single-family homes will go up because affordability went down. Kind of a layup. We've talked about that a bunch on this channel. Will home prices correct? Largely speaking, she says no, but of course there will be some bubble cities, which I think we have all agreed. I picked on Boise 6-9 months ago. And then finally, what does she recommend for buyers? This one hurt. This one hurt. What does she recommend for buyers today? Look into adjustable rate mortgages. You know how I feel about ARMs. I understand that more and more consumers will turn to them. That doesn't make it okay. It's just where we are. But again, I have seen ARMs blow up. We have talked about Canada and New Zealand a lot the last month. I see pain there, and it is because of ARMs. Next, I don't know if you heard this, but Russia today turned off oil to Germany. Now, we need to watch this because this is routine maintenance. You gotta maintain pipelines. I think that's reasonable. They scheduled it down for 10 days. Germany did know this was coming, so again, not a surprise. My question, does it turn back on? Does it turn on slower? Does a accident happen and the maintenance thing is extended? We have to watch this. If you watch the All In podcast, you know we are on the razor's edge of oil. And if this goes on longer or is kept shut, it could be a worldwide problem. Nothing to worry about today, but it is something we should all at least keep a casual eye on, because that oil doesn't turn back on at the same numbers. That could be a problem. Now, China. So we've talked about China a bunch on this channel. It started seemingly 9, maybe 10 months ago with Evergrande. We've talked about the consumer and Starbucks and Nike, and we've talked about bank runs. Well, China's back at it again. There's more and more bank runs. You can deposit money, but you can't get it out. This was in, I wrote down the bank, Henan Bank. And also there are rumors at the biggest bank in China called the Bank of China. Folks, consumers in China are scared. They have already retreated from housing. They have already retreated from extras. They are retreating more and more, and they are losing faith in their government. Not good. And then Chinese tech. What are you really? All right, there's always these rumors. China has finally stopped punishing tech, Alibaba, Tencent, these kinds of things. And then out of nowhere, you're shocked that they got fined again and their stock is down. I mean, how many times do you have to have the rug pulled if you are investing in China? What else? So again, we're talking about peak inflation this week, the consumer slowdown, big banks, mortgage, trading desks, lots of things going on this week. Let me talk about these dates. This upcoming Saturday, we had originally planned to do a 90-minute deep dive on self-management. Based on feedback from all of you in the YouTube world, all of you suggested, or I shouldn't say all of you, many of you suggested or asked that I reach out to Spencer Cornelia to potentially talk about house hacking. I did that yesterday. He has agreed to come on this Saturday. I am also reaching out to Todd Baldwin because if he can say yes, maybe we do a combo roommates edition and then maybe we do a different style house hacking after with the lumberjack and Matt. But again, if we get Spencer and Todd can't make it, then maybe we will do the three amigos, kind of Matt, Dion, and Spencer. I think if we can get Todd and Spencer and focus on roommates, maybe we just do that, and then we do house hacking the other way, right? Duplexes, quads, things of that, and a follow-on session. At the end of the day, I'm trying to use this community of one rental at a time, the influence of one rental at a time to get you more experts and more quality content. So at this point, July 16th is going to be house hacking roommate edition. Then next week, we will either do self-management or we will do house hacking version 2, unit style, duplexes through quads. I will probably let my audience tell me what is most important. But again, remember, what do? You have to be a student if you want to ask questions live. You have to buy my course, get the Facebook group. I will send a Zoom link probably today or tomorrow. And of course, as always, I give it back. We will record it with my students, but if you wait a day or two, we will post it in the YouTube group for all of you to watch. There's actually a playlist called Deep Dive where you can see some of my longer format videos. Lots and lots of stuff going on. And then the last thing we got to say is Chinese and South Korean manufacturers are starting to throttle production. They are saying consumer demand in Europe and North America are falling. Samsung halved, cut 50% of their July order. You think there's a lot of Samsung TVs on shelves? I think so too. And then Highbrew. Highbrew is a Chinese manufacturer. Doesn't sell a lot in the US, but is around the world. They said last year they grew 70%. This year they have seen orders fall 30 to 40%. The economy certainly feels to be slowing down. Folks, this is your daily financial news. I am so excited that Spencer Cornelia has agreed to be our deep dive expert on house hacking. I'm trying to get Todd Baldwin on that episode as well. I think that'd be a power combination. And then we will do another deep dive with Matt and Dion, either on house hacking or on self-management. Both topics warrant their own show. This is fun for me. It might feel a little chaotic. It frankly is. I love the fact that one rental at a time is just big enough where I can get other experts to bring you value. So I don't know about you, but I'm excited. Like, subscribe, comment. Don't forget to hit a like for Sunny and Happy, which she's in the other room or else I'd get her for you. All right, everybody, take care of yourself. Bye.